What do you think is the biggest mistake that people make when it comes to crypto?
Calling it a scam.
Somebody who's starting out, then how do they know what coins should they invest in?
Bitcoin 100%. Bitcoin has grown at 150% annual rate. I made a lot of money in the first cycle and then lost it all back. Money loves speed, not perfection. The US dollar bill is single-handedly the biggest scam associated currency in the world. Be it stock market, be it real estate market, it's the sum of every individual's emotions. If only one person has 21 million Bitcoins, it's worthless. If the entire planet has some, it's very valuable. Favorite question they ask is, how much money should I put in crypto? The first question I ask is, who are you?
Do you think traditional finance will be able to merge with decentralized finance?
It's nice that you said merge and not replace.
Friends are recommending it, so they put in a lot of money in it.
I like to operate with what I call believability index. If my dad is giving me relationship advice, I'm probably not going to take it. China banned crypto maybe 15 times in the
Did you never think of it as a scam like everybody does?
The first people to adopt Bitcoin were mainly hackers or people on the dark net. And so they associated their image or the crypto, but it's not true.
How do you know what company or platform can you trust and you cannot trust? Hi Tanuj, thank you so much for being on Aleena Dissects. Very happy you're doing the podcast with us today.
Thank you for having me. Let's do it.
Yeah. So my first question to you is that you went from clearing your CFA at the age of 23 and you were amongst the youngest people to do that. And then you went to decentralized finance. So how did you make the shift?
It's actually a true story. I was working first in a hedge fund. That's when I got introduced to crypto. Like the traders, they were just gambling. Eventually, I went into investment banking. I did my CFA. And we worked on a cross-border deal between France, Germany. And there was this signing, meeting at a lawyer's office. So we get there, everyone celebrates, the deal is done, champagne's flowing, and I remember it was 10 million transaction. The lawyer calls Deutsche Bank, so German bank, and says, "All right, you can send the wire." And they go, "All right, we're gonna send it now." And here I'm asked my boss, right? It was still early days, so we've worked 6 months on the deal. I'm like, okay, so when is the wire going to hit the accounts? And he goes, oh, it's going to take like 2 or 3 days.
Okay.
And I started like acting dumb. What do you mean 2 or 3? Like to who does the company belong for 2 or 3 days if the money doesn't hit, right? And then next question I go, and by the way, like how much is the company paying in fees to Deutsche Bank for the wire? And he goes, oh, around like 100K something. And how much did we make as like advisors? We worked for 6 months. Like, oh, 400. Okay. I'm like, okay, so to send just one wire, they made 100K. And we made 400 for 6 months of hard work. And he started laughing. And that same day, I remember, I went back to the office and I sent like $1,000 in Bitcoin to one of my friends. And I got surprised because it hit in like 3 seconds. And the fees were like barely even $1. So I just typed on Google, how much would 150 million transaction or 10 million transaction or whatever that is would have cost if I had done it in Bitcoin? And the answer was surprising, like $3 and maybe 1 second.
But that's changed now, right?
Back then, the network wasn't as congested. But then that day, my eyes opened. Because I was like, look, there's a practical case where this technology is better. It's just practical case. It's in front of my eyes. And from that day, whatever people would say, I didn't care much because I knew that there was utility. And so once I figured that out, I always kept investing, going to conferences and learning more, getting educated. That was early days, right? That was like early 2020s.
And did you never think of it as a scam like everybody does when they first hear about crypto?
The reason why people actually say that is the first people to adopt Bitcoin were mainly hackers or people on the dark net. And so they associated their image with the actual Bitcoin or the crypto. But it's not true. It's just that they're more on the internet, they're more on their computer, so they saw the utility first.
Okay.
But you shouldn't associate their image with the technology. Now, in this particular case, it would have been very helpful. The company would have saved around like $100,000 in fees. So it makes a lot of sense, right? So no, I didn't I prevented myself from just accepting what was the common truth, and I wanted to see by myself.
But over the years, we've seen that a lot of actual scams happen in the crypto space, a lot more than any other industry, right? So, when, for example, the FTX happened, that was like an eye opener for a lot of people. And a lot of people took back at that time that, this is something that is very, very risky. Or back in India, was Zerex, as in the entire platform just got down and people lost so much of their hard earned money. What do you do in such times when you know that this is something that could just wipe off because there's no backing of a government in place?
What makes you say that there's more scams in crypto than anything else?
Because of the money associated with it. So legally, when you look at a market, you know that, okay, if I do a fraud or a scam, the government is backing me up into, for example, they know what is happening, or they can track it, or there's laws around it. But there aren't laws around crypto that will help somebody get their money back, because if you lose money in crypto, there's nothing you can do about it. So that's where it's stemming from.
What if I tell you that to this date, the US dollar bill is single-handedly the biggest, scam associated currency in the world by
Why
far?
would you say that?
Because there are facts. You can look it up on Google. Another thing, did you know that the biggest banks in the world, JP Morgan, Goldman Sachs, Morgan Stanley, all of these associated, have been fined over $80 billion for money laundering in the past 10 years since like the global financial crisis? $80 billion. Crypto never reached that amount. Never.
Hmm.
So another thing,
Hmm.
FTX or Vazirex, again, you're associating the fact that there are crypto platforms
Hmm.
with the misbehavior or criminal activity of their founders, right? Or of their management team.
Okay.
But at the end of the day, FTX has nothing to do with using blockchain technology in itself. It's just a retail shop that sells crypto products.
Hmm.
The end product is crypto, but it doesn't matter. It could have been Robinhood that does with stock market, right? It's just that if Robinhood's management team was engaged in wrongdoing, then Robinhood would have come down. Would have everyone said that stock market is a scam? No. So they're just buying and exchanging crypto, right?
Right.
But in itself, in their operation, are they using blockchain? No. Are they using the technology? No.
They are using the blockchain,
No,
right?
they're not. They're just an exchange. But an exchange is like a Web2 business that just trades and helps and facilitates the trades of crypto, but that's it. They have nothing to do with using the technology in itself. Nothing.
Okay. So then, as an investor, how do you know what company or platform can you trust and you cannot trust?
Okay, that's different. So just like tomorrow you want to invest in a stock, right? What do? You look at the management team, their experience. You're going to look at their books. You're going to look at their past activity and what they intend to do in terms of vision, strategy, what they're trying to achieve, right? The business plan. Now, there are some people who are better at that than other people who have no clue. In crypto, well, it's so new and it's so tech-based that it's very difficult to understand, okay, they're selling me a roadmap or what they're trying to do. I mean, I don't understand anything. That's the problem, right? So at the end of the day, most people end up buying a vision of a person, which is going to be a founder, a management team, and they have to understand if what they're trying to achieve is achievable in the first place and if they can do it. Now, it's difficult because, look, Warren Buffett, for example, who is often considered to be the best investor in the history of investment, right? He missed out on tech. So he missed out on Facebook. He missed out on Amazon. He bought into Apple very late, even though it's hardware, not even software. He missed out on a lot of these things because he said, I don't understand and I don't know how to value a company that does tech. I don't know
Yeah,
how
he
to do it."
doesn't invest
Right?
where he doesn't understand.
So crypto is like that on steroids. It's even more difficult because it's
Right.
like completely new. So yeah, I mean, most people who don't understand it, because they don't want to admit that they don't understand it, they're going to call it a scam. It's much easier.
Okay. And if I had to understand there are lots of platforms or companies, how would I know which one is going to be something that is safe or something that's not going to be a scam?
Proper research and understanding what you're trying to do and achieve and who and what are you looking at, right? More often than not, you're probably going to need some help in people who
Yeah.
actually do it. Now, there are people who do it because there are people who understand deeply the tech. It's open source. They can read the tech documents. They can read what we call the white paper. Um, and they have more understanding in that particular field.
That happened with me actually when I wanted to get into this space and just understand what this is without the blocking of like, okay, it's a scam. I first read the paper. I first read the Bitcoin the initial white paper Bitcoin. And then I was like, okay, there is some backing to it, but it does get very, very technical for somebody to go deep dive into it. But if they want to learn more, there are so many resources out there. Where does one begin to like learn?
You always have two options, right? Typically, you're going to have a lot of free resources out there, and then you're going to have to scout through everything. The other way, like always, is you pay for expert advice. We're going to curate the content and all the learning that has to be done in the right sequence and put it out there for you. It's always a balance between price and speed. Oftentimes, what you buy is the speed. I'm going to give you another example. Typically, if today I feel like I want to have abs, okay? I have two options. The long option where I go to the gym and I commit to eating well, or the quicker option where I pay and I get it done. It's the same thing. In life, it's often about price and speed, and there's a balance.
And what do you choose?
Well, I'm someone who invests a lot into my learning, and I feel like speed, I truly believe that speed is everything. So I'd rather learn and pay for it if I know that the quality is going to be good, because I'm going to be able to do something with that information and actually get a return on that. So I'd rather pay for expert opinion.
Okay.
But then there's some other things, for example, the abs thing, I just commit to it.
Right. Okay. But tell me, for our audiences to understand better, like you said, that maybe there's not enough knowledge in this space. That's why you're afraid or you don't believe in it or they're scams. But if you had to draw parallels between the stock market and between the crypto market and blockchain and Bitcoin, everything, what is the differences and what is the similarities?
I would mainly compare it to the main tech stocks, right? So Google, Amazon, they now represent the lion's share of the entire stock market anyway, in terms of market cap, right? And if you look at their charts since the year 2001, so since the internet bubble burst, it's actually what we call a secular trend. So the tech stocks or crypto and anything that is related to tech is usually based on what we call the Metcalfe's law. In simple terms, network effects. If I have a phone, you have a phone, it's not very valuable. If everyone in the world has a phone, now the network is very valuable because we can all communicate, right? So that law tells you that the more participants, the more valuable. It's the same thing for Bitcoin. If only one person has 21 million Bitcoins, it's worthless. If the entire planet has some, it's very valuable. You see? So now that same law applies for Amazon. If everyone is using that same portal, it's very valuable, right? If everyone is using Google and feeding the data in the algorithm, it's very valuable because the search gets better and everyone gets more and more and more value out of it. So now how does it translate into price? Adoption follows a secular trend, which goes straight in line like this. But price, so valuation, that follows a cyclical trend. Even though on the long term it's still like a secular line, the price is going to do up and down, up and down, up and down. So you really need to zoom out and see, oh yeah, actually it's going up. If you're in the day-to-day, you feel the heat of going up, going down in that, volatility. So if I had to compare it, it's all about the adoption. That's what matters, not the price.
That's how even I understood this space, because when I entered it, I went back to like long ago how people just understand money. And when somebody was teaching me, they said that back in the day, why is fiat currency valuable? Is because we all collectively decided that this paper has value. And so if tomorrow everybody decides that Bitcoin is valuable, the more and more people understand, then the Bitcoin will become more valuable.
That's it.
That's how I would explain to like the audiences.
So back in the days when I saw that the same, bank transaction could have been done, I just understood that there's more people going to see it, just like I saw. And so if more people see it, they can't unsee it. just like I couldn't unsee it anymore. I was like, this makes sense.
Hmm.
So once more and more people just say it makes sense,
Hmm.
they go on the other side. And now they're never coming back because they saw it. And that's the adoption.
Hmm.
It's more and more and more and more that stack on top of each another one. And
Okay.
then adoption happens.
Now, say it's a valuable asset class, but it's extremely risky if you compare it to other asset classes, whether it's real estate, whether it is the stock market, right? Because they fluctuate, obviously they do, but like not as much as crypto. That's true, right?
And
The risk is very high when you're investing in crypto, right?
I mean, I'll just tell you something that might make you rethink.
Hmm.
In the last 15 years,
Hmm.
if you take every single year in the last 15 years, out of 15, for 13 years, the best performing asset class in the world has been crypto.
Best performing in terms of value.
Yes.
That has
in terms
gone
of
up.
returns, yes.
In terms of returns.
Bitcoin has grown at 150% annual rate since its inception. Every single year, if you just bought 150%, 150%, 150% every single year. It's just that it works in a weird 4-year cycles, okay? And every 4 years, there's 1 year in that cycle where it goes down tremendously because it adjusts. People get excited, it overheats, it comes down. But if you just keep looking at the secular trend, still up by a lot. When I started Bitcoin, it was at 3,000. Today it's 100,000. People are like, it's still risky. I just don't get it.
That's what I say also. So I've invested, obviously not as much, but when I invest also, I'm like, I understand that crypto is going up and down. But if you look at it in a long term, that's what you mean to say. If you look at it a really long term, like 4 years, 5 years, the prices obviously just gone up. Now there in the middle, what happens is people get very afraid and very scared because of what's happening in the market and because it's going up and down. And I think that I don't know how to look at it short term. I would always invest it thinking that, okay, like 5 years, 10 years, because I'm not trading in it.
That's the best thing to do. But CFA level 1 is probably 1,000 formulas, complex math, financial formulas. CFA level 2, same thing. CFA level 3, it's an essay and it's mainly focused on managing emotions.
Hmm.
So when I first saw that, I was like, this is a piece of cake that's going to be super simple. Well, guess what? I had way better results in level 1, level 2 than level 3. Why? Because I'm much more of a logical
Yeah.
person than an emotional,
Yeah.
like, managing my emotions, let's say, was a bit difficult when I was younger. And so I learned. I paid the price. I made a lot of money in the first cycle and then lost it all back.
When you say lost it all back, how did you lose it?
I just gave it all back to the market. I didn't sell on time. It
You
came
didn't
back
sell
crashing
on
down.
time.
No.
How do you know what time to sell it at?
Back then I didn't know.
Okay, and today, if you had to
Experience
say,
and understanding what drives the prices. Prices are just a reflection of
what's happening.
other things. And typically it's macro, but we can come to that after. What I'm trying to say first is the market, be it stock market, be it real estate market, it's the sum of every individual's emotions. That's what it is. So when we talk about market psychology, it's about understanding people's emotions and how it's reflected in the marketplace. You might say, wait a minute, in the stock market now it's mainly algorithms. Yeah, but who created the algorithms? It's humans with their emotional biases that are now ingrained in the algorithms. And when you understand that it's just a prediction game mixed with emotions, then it gets much more easy to figure out that short-term price movements don't really matter.
I've seen that in the stock market, and you won't believe that a few days ago, somebody came and told me that they want to invest like this huge amount of money in the stock market because the prices are down and it's going to go up. And somebody told them, whatever. And I said, don't do it. And I said that because I know that this person will not be able to take the risk that comes with it. Because while you know your numbers, you have the money and you have all of that, it's also you have to be very mentally stable and secure to be able to see the up and down.
You're extremely right. Very good advice. When someone, I mean, you can guess by now that many people come to me and say the favorite question they ask is, how much money should I put in crypto?
Yes.
And then I look at them and I'm like, the first question I ask is, who are you?
Who are you?
Yeah.
I
Tell
thought
me about you.
Okay.
What kind of a person are you? Because if I know that they're balanced, they understand, they have invested before, it's a different game than it's someone who owns like his last 10K and they're going to throw it all And when it's down 50%, they're going to take it back. When it's now going to start going up again, they're going to invest back at the top. And then when it comes back again, they're going to sell again. You know what I mean? So
Yeah.
I want to understand their risk aversion level, but also their control in terms of emotions and their time horizon. For how long do you intend to invest it? And what percentage of your overall, like it doesn't make any sense to ask me how much. If you're someone who's a billionaire and I tell you 5,000, and you're someone who owns 5,000 and I tell you 5,000, isn't there a difference?
Yeah, of course.
Yeah.
More than depending on how much you have, it's also how much you allocate to it, right? That's why they say that crypto, you should invest a little bit in the beginning and then grow it over time.
When people ask me this question, I give them a very logical answer again, okay? There's an easy way to say that the current overall global economy represents 100 trillion, more or less, okay? And the crypto asset class represents between 2 to 3 trillion. So basically, crypto represents 2 to 3% of the world's capital. So now, you and your portfolio, if you have less than 2 3% of your overall investment portfolio allocated to crypto, then it means that you're short crypto. You're betting against crypto.
As in?
Because if the overall economy, crypto represents 2 to 3%, then if you are less than that in the portfolio theory, it means that you're against it. You don't think you should have as much as the overall economy holds. So if you hold less than 2 or 3% of your overall portfolio or personal portfolio, less than 2-3% in crypto, it means that you're short, you're against it. You think it's not going to do as well.
So how much of your percentage should be invested into crypto?
Well, I might be biased.
You are.
I might be biased. My overall allocation is more than 30-40% of what.
That's yours. But
That's
like
mine.
if you had to tell somebody, if you had to tell me or Leena how much of your investment is
Okay,
to go.
I'm going to ask you two simple questions. Do you believe that crypto as an asset class is going to outgrow other asset classes for the next 5 years?
It depends which other one.
Let's say stock, real estate.
I think it would go hand in hand. I don't know if it will surpass it. Like, and I don't know
So-
how long it will take.
Stock market typical
For that.
gains, annual gains are typically 10%, S&P.
Yeah.
Do you think crypto is going to do better than 10% annually or less?
Eventually, yeah.
Better?
Yeah.
Okay, in that case, if you think it's going to do better, then you should over allocate. So more than 2-3% of
But
your...
not right now, right? 2-3%. So I would ideally assume that 10-15% of what you're going to
Okay, so you're very long
invest.
crypto then.
Really?
Yeah.
People don't do as much, obviously. Okay.
I do way more, but here's the catch also. If I've spent 35 years in real estate, then obviously I'm going to over allocate real estate because I have an edge. I have more understanding
Knowledge,
and
yeah.
I'm able to beat the market thanks to my years of experience and understanding and learning. That's why I'm able to go higher because I've spent 8 years in it.
Correct.
I wouldn't suggest for anyone else to go 30-40%. Although I'm pretty sure it's going to do well.
But that's if they have the risk appetite and they have the knowledge.
They have to go through a risk assessment first.
Yeah, because if they don't have that, then they're 30-40% not over your peace of mind, right?
Yeah, and also, I mean, they're probably going to screw up their allocation because...
Because then they'll remove it, put it
yeah,
like that.
and once you go into crypto, it just doesn't mean go into crypto. I mean, there's so many. Which ones? Right? And within crypto in itself, you should have a balanced portfolio because you might believe me or not, but Bitcoin is considered as the least risky
Yes.
crypto,
Yes.
right? So this one should take a higher portion.
Yes. And on that, I wanted to ask you that if somebody says, okay, let's invest in crypto, they want to, okay, somebody who's starting out, then how do they know what coins should they invest in?
Well, Bitcoin 100%. That's where you start.
Bitcoin, Ethereum are two.
Yeah, Ethereum, there's more of a debate. Bitcoin 100%.
Okay. And what about meme coins and shit coins?
So I come from the CFA line of, thinking. And we call that the balanced modern portfolio theory, which is trying to maximize your gains while minimizing your downside. That's the goal, theoretically. If you think about it, like because it's a volatile asset class, right? It is 100%. What you want to do is you want to allocate a bigger portion to the least risky, but then you keep, you spread basically your bets. So one typical example that I would do is like something like 20-30% into Bitcoin. Like, okay, let's say I decide that I want to put 10K into crypto.
$10K, yeah.
$10K. I would go 20-30% into Bitcoin. I would go around 50% into blue chips. Blue chips will be some of the more established ones that are in the top like 30, 50 crypto market cap. And then I would allocate maybe 20% at the end, the bottom, 20% to the more risky, smaller gems or meme coins or all these things that are very low market cap, super risky, but have potential. I mean, if you hit right, they have a big, big potential.
Something like a Trump coin.
Something like that. Yeah.
Okay, understood. Now, out of all of the knowledge and experience that you had, you built a company around it. It's called Decentralized Masters. Tell us what it is and also what was the need for it in the market.
We launched our business literally after the FTX collapse.
Yes.
What we realized is that exactly like you mentioned, actually, you opened the way for me. So thank you for that. You said crypto is a scam because FTX fell. But actually, they never used the technology. And so that means that there is a gap in the market in terms of education, understanding the technology in itself and what it can do. What decentralized finance can do is cutting out the middlemen, which is the banks, the escrows, all these companies that stand in between two people who are involved in a transaction and end up taking big fees and basically all the profit. Right? What we decided to do is we want to teach people how to make money with this opportunity because it is a big money making opportunity, definitely is, but it's risky. It needs learning. It needs understanding of how to navigate it. So what we did is we provide a program that has 3 pillars because there's 3 ways to learn. One is a digital video training course where we go step by step, show which buttons we click, and we explain why. That's a good way to learn. But then people need interaction with teachers. So we have mentors who are extremely good at this, quants, researchers who spend their life doing this and who've made, good money with it. And they teach our customers. And then the last aspect is the community aspect, where they interact between each other, answer each other's questions, even support each other, right? And cheer for the wins. And so now you get this ability to learn one-to-one from a teacher, learn side by side with other, people who are getting taught something new. And also in a class aspect where you're not just getting the one-to-one, but you're also getting the learning from one to many at the same time.
Did you think in the beginning of when you started it that a lot of people would need this?
I had the conviction.
Okay. And over the time, you've seen that a lot of people are interested in learning more about crypto.
Oh, it's way more than you think.
Right. I wanted to ask you that when you're teaching them, you're basically teaching them what aspects of crypto. Are you teaching them the technology? Are you teaching them how to trade, how to make money, or how to build businesses?
In everything in life, I believe you should have a top to bottom approach. So you start with the bigger picture and then you narrow down. And some people want to go to the absolute detail. Some people are happy to be here.
Okay.
Depends, right?
Okay.
So what you start by doing is you explain what I explained early on, the secular trend. You compare it with other tech, revolutions, how smartphone adoption went, internet adoption went. It's easier to put in perspective and understand what's going on. Then you go one step closer. Now you explain how prices move and how that's different. You explain what's the difference between the fiat system and Bitcoin. How Ethereum is a bit of an app store on the blockchain or for crypto. And you keep going in more and more, narrowing down a bit more up until literally how to value a crypto. We explain that. Where to buy it, how to buy it, how much you should buy it, so how to set up your portfolio and what allocations. Then we go one step deeper. We say, okay, now there's an opportunity to provide your crypto as capital, as liquidity on the markets and get paid a fee. Just like if you were an ATM, okay? Or you get a cut on every transactions. That's the best business model ever, right? Let's say Stripe, big company, they provide this portal where anyone can swipe their cards, credit cards, and they take a small fee. It's the same thing. You can do the same thing with crypto. Okay, super interested. Because normally it's the bank who does that. Now you can be the bank. And we keep going. Then you have how to find those meme coins or those gems that might explode. Okay. So we do quant screenings and very technical trading stuff. And again, it's like people stop where they feel comfortable at, but we're able to teach until the very, very last piece that is very profound.
Okay. So, from what I understand, you give them the knowledge about the whole industry and about the entire market, but then you also teach them how to trade in it.
How to make money with it, how to trade with it, and how to provide liquidity to do what we call yield farming.
Correct. And what happens in the program once they are there? Are your students and community able to make a lot of money from the trading?
Yeah, we call them members because they're
Members.
high net worth, like seasoned investors who
Correct.
just want to learn this new, aspect of investing.
What kind of members are ideal for this program?
People who've been in the markets before, they've invested in stocks, they've invested in real estate, so they know that it takes. There is a learning curve because if you just we don't sell dreams, and people who want to throw their last 5K, as I said, on a meme coin and hope that it goes to. I mean, that's called gambling. And we want to teach proper investing, how to structure your portfolio to catch on the upside, sorry, and limit the downside.
How do you filter out people that want to enter the program?
We have a very tight selection process. And honestly, with price, we're
Yeah.
extremely premium.
Correct. So, how do you filter out who you want?
There's an application process,
Okay.
and then they have to talk to one, sometimes two gatekeepers.
Gatekeepers.
Gatekeepers of our
That's what you
community.
call them.
Yeah, to keep the community only with the right people. Look at Harvard.
Hmm.
What do? They select the students they feel can be successful. Why? Because they want to maintain their success rate.
Hmm.
If we just welcome anyone for any kind of if they can pay, they can come in, then our success rate goes down.
Hmm.
And people who are supposed to succeed will not appreciate the experience because they're paired with people who just do not belong here, do not have the same values or goals. And that doesn't work.
Are you looking at the Harvard trajectory for the company in terms of education?
Not really, because that's the old world. We think that online education is going to be enormous.
Hmm.
And then when you couple it with crypto, that is also going to be enormous.
Hmm.
It's like a big growth trajectory. But now we're more venturing towards providing better tools.
Okay.
So educating is one part, but then providing the right tools that come with it supercharge the results. So we're looking into softwares.
What kind of tools help you with the program?
Well, it's actually our customers who came to us and said, look, they're on the older side.
Hmm.
They came to us and said, look, we're 50, 60, 70. We've made a lot of money thanks to you guys. But now, what if I die tomorrow?
Hmm.
That was an interesting question. I was
So
like,
you had to solve that.
yeah, kind of.
Okay.
They said, what if I die tomorrow? Where does all my crypto, all this money that I made, is it like, where does it go? I don't want it to go in limbo. I want it to go to my kids,
Okay.
right? And they don't want to lock it up
Hmm.
and it stops earning a yield. So how do I make sure that even if something bad happens to me, how does it get
How does it get passed on? Like a real estate or stocks would have a nominee to give it to
Right.
somebody.
Because my kids have no clue about what I'm doing, for
Okay.
example. Or my wife.
Give them the ledger and the password.
No,
That's not how it works.
because they're using decentralized exchanges and liquidity pools to multiply their capital.
Right.
So it's not.
It's not stuck in one
Yeah,
place,
yeah,
the
yeah.
money.
So, well, what we came up with is an estate planning solution, if you want, that basically lets them have a dedicated wallet that belongs to whoever they want. And then if there is proof of death, we call it, the money goes there.
That's something that you've built.
We're building it, about to launch it. And there's also portfolio management features, tax management features, all the features that they'll help them better manage it and grow it even further without having to think about what's going to happen if I die.
Got it. Is there a simpler way to educating people on crypto? Or do you think it's always going to be as complicated and the people that understand this will be able to enter the market and the rest are going to remain off?
In terms of right now, the barrier is that the UX, the user experience, is not as good. Wallets and like sending money, it's a bit scary.
Hmm.
So people who are willing to go past that barrier,
Hmm.
they come in and they obviously are early and they can profit more. Because if you're early, typically, prices are lower in theory, right?
Hmm.
But here's the thing. Out of every single Indian out there or inhabitant of the planet, How many are invested in the stock market right now as a percentage?
Few. It's not a
Not
lot.
much,
It's not a lot.
right?
That I know.
So crypto is even less, right?
Yeah.
I do think it's going to be more because it's less, it's frictionless, and the young generation is way more open to it.
Hmm.
If you look at like Gen Z, Gen X, or I don't know how we call them these days, um, if you look at surveys and what they're saying, 50-60% of them have appetite for crypto. They have no appetite for stocks, but
Hmm.
for crypto they do, because it feels way more, something they
Easy
can
to.
relate to.
But also, this reminds me of the time, for example, when if you look at our parents, especially back in India, there was a time where they just wouldn't get their head around how to use a credit card. Like they would be like, no, I don't want to put an OTP. I don't know what this credit card or CVV is, right? That adoption took a while, but now every single person uses a credit card. Same thing back in India, wherein UPI today that we use in India is just like the fastest growing thing that you can do. Like just and every vendor, every store, every person in India uses a UPI. But then that adoption happened, and then it was easy because it takes 2 minutes for me to scan and make a payment.
Okay, so the UX,
But
the
when
UX,
it's
the
correct,
user experience.
but when it's crypto and when it's these long numbers or passkeys or open another window or whatever, that's a complicated process.
Do you think it's going to remain a complicated process?
Yeah, because the blockchain is built in a certain way, right? That process can't change.
Of course it can. It's going to be in the back door. You're not going to see any of it. Typically, the software we're building, the user will never have to see even their wallet address if they don't need to. We're going to be able to social log in with Gmail.
So all this it will happen and
course.
become easier.
Of course.
For example, if I again talk about India, we have platforms that do stock trading. So Zerodha it's called, okay, wherein you can invest in the stock market and it's very easy. It's built by the Kamath brothers. Now, when you talk about Binance, for example, if I had to just make the comparison, Binance is complicated. Like for somebody like me, for example, I don't come from the math finance background, right? And I had to really invest time into learning it. So I did. But a lot of people would stop at that place where they would be like, okay, there's just so much of, say, converting in which, where you have to put your money. How do you invest? How do you look at it? How do you look at the charts and all? It's a complicated procedure, which, for example, Zerodha made very, very easy to invest into stocks.
So you just solve the problem. With adoption, what happens is more and more talented people get into a new industry and start fixing the problems, the adoption problems, and then the adoption accelerates, right? Think about the internet 20 years ago. How were the websites?
Yeah, so bad.
Even
One
5 years ago, how difficult was it to build a website? It was difficult. Now, no code, nothing. You can just AI, you can just build a website like this. I'm a genius graphic designer, right? Now I am. I never graphic design anything in my life, but I'm a genius graphic designer.
Okay.
Right. So it's going to be the same thing.
It will get easier.
Of course. But you will pay the price of inaction because you weren't early.
Then everything becomes much more expensive.
Everyone will eventually ride the wave. Okay. The only question is, do you want to ride it now and go against that, uphill battle and have to learn? Because the value is in the difficulty. The value is in the fact that it's not perfect. Or do you want to just wait and join in 3 years when smart people have solved the problem for you and the user experience? But then don't ask for as good of an opportunity as now. It's always the same trade.
But the problem with this industry is that it's associated with the market and with the pricing and with money going up and down, right? With other industries, for example, if you spoke about graphic designing, it's obviously become much easier because are not related to all of those aspects. Over here, what happens is that you're looking at, okay, now there's the bull market or there's the bear market. So like you're associating with money going up and down. So it's taken so long.
Well, you're associating it with money because you see the blockchain technology only through the lens of crypto. But crypto is just one application of the technology itself. The blockchain technology has enormous application typically in supply chain, for example. In the future, I'm having my coffee. If I want, I will be able to scan a QR code of the coffee box and I'll be able to follow the path of the coffee, which countries it went to, in which port, and I'll be even able to see a video of the farmer in Colombia who was like, making the coffee in the first place or picking up the grains.
How many years before we see this happening?
People are building it.
Okay.
It's quick.
Uh,
So, and you can name me any single industry right now, and I can tell you how blockchain is going to be used.
a use case for it.
Yes.
Okay. Which is the most interesting one? You tell us.
I like the luxury market one.
Mm,
Rolex, for example. How many fake Rolexes are out there?
so many.
So many, right? This is probably going to be prevented thanks to blockchain. How they're going to do it is Rolex in itself will have a wallet, the official wallet. And whenever they're going to issue a new Rolex to you, you're also going to receive in your wallet a single NFT, which is like digital ownership. The day you sell this Rolex, it will be worthless unless you also transfer the NFT. And so if you're buying the Rolex from someone, but they're not transferring you the NFT that is traceable back to the initial seller, which was Rolex, then it's either not a real one or it got stolen.
See, I tell you to be honest, I think that's fab and it's a great idea. I just think we're many years away from something like this.
Possible. I just think that technology now evolves way quicker than it used to evolve
That
even
is
a year
true.
ago and then a year ago.
That is true. But coming back to your program, I wanted to ask you that has there been cases where people don't find it as useful or have dropped out of it, or what happens if they don't find it useful?
You can't have a 100% success rate. It's just a fallacy. Right now we have I would say 82% completion rate. We have a 57% retention rate. So people buy the program for 6 months and then buy again to renew their membership for 1 year, which is a good result.
It is. I'm just wondering what happens when they invest so much of money into it because it's a high ticket program, and then what happens if they don't make money? For example, some must be coming just to make the money, right?
Right? Then it's our job to understand if it was our fault or theirs or a mixed. When you go to Harvard, sometimes you don't pass, right? Most often than not, they're going to tell you, oh, it's because you didn't study.
Most often that is the case, right?
So are we allowed to say the same thing? Yeah.
What do you think is the biggest mistake that people make when it comes to crypto?
Calling it a scam?
That's the mistake.
It's a mistake.
Investing mistake, then I should ask.
Go without knowledge, education.
I've seen back in India also a lot of people say, like, friends are recommending it, so they put in a lot of money in it. Like, this one is saying it's going to go high.
Yeah, I mean, what do you expect from something like that? I mean, okay, I like to operate with what I call believability index. Okay? If my mom is giving me business advice, I'm probably not going to take it.
Sometimes it could be right.
Yeah, but if my dad is giving me relationship advice, I'm probably not going to take it. Right? So then who's your friend? I mean, if my friend is Vitalik and he tells me buy this, I'm probably going to buy it. Even though I'm a very I do a lot of research and he tells me I'll buy it.
Right.
So what is the believability index of that friend of yours? Just think like that.
Okay, now if I zoom out and look at the bigger picture, which is governments, okay, and we'll talk about the Indian government in context over here, but a lot of other countries also, we have very restricting laws on crypto because, correct. How do you navigate the space, keeping in mind there are laws that are restricting you from this industry as a whole?
I think people have a very short memory. What was the US's stance on crypto 1 year ago?
It's person to person, right? Because the leader right now is pro crypto.
Now,
Now.
1 year ago, what was it?
1 year ago, they didn't believe in it, right?
Right.
So that is the person led.
Every single government, every single entity, agency, company, institution, it's person led. So the guy who's at the top of the chain, if he believes in it, everyone else will. But doesn't matter. That's the question, right?
Okay.
What we've been teaching our people, we've been early to it, right? I've been in it for now 8-9 years. And everyone obviously called me crazy. Obviously. But then what happens is typically when you want to achieve something big or you want to believe in something new, you have to be wrong at first. Because as we say, they first laugh at you, then they fight you, and then finally they welcome you. And this is exactly what's happening in the US, for example. The last 3 years, they fought. very hard against crypto.
Hmm.
I don't know if you've seen the interview of Mark Anderson, who is a big venture capitalist, on Joe Rogan's podcast. And he said that the government and the banking lobby, what they had done is they were shutting down every crypto founder. They were shutting down their bank accounts, shutting down any access to capital or funds or anything. So they're not saying, hey, crypto is not allowed. They're saying, oh, it's allowed. But in the back door, behind the curtains, they're canceling everyone.
That's what is happening across
In
the
India,
board.
still. Yeah, I know. It happened to me and my company. We got canceled by Stripe, by Facebook ads, YouTube ads, Pioneer, all these banks. They all canceled us without any reason. And whenever you ask, they say, oh, sorry, it's like our internal policy.
So how do you navigate this?
You just fight because you have to be wrong and you have to prove them wrong eventually. We almost gave up, but we didn't. And now we're pretty happy we didn't.
Now that is as a company and a business that you are establishing, but as an investor, how do you navigate the space in terms of like the government's not believing in it? Because that I know is
Find
a
ways.
huge problem for adoption.
Okay, I know, of course. But if you find ways and push through and you fight because you believe in it, right? You have this bigger vision. The day it turns and the day the market now says you're right, you were right. Now you're going to win big. That's what happens with us. Like we were wrong and called fools and we had to fight, but we didn't give up because we knew one day this will turn. We are right. We are right. And eventually we're right. And now, what do you think? Elon Musk, when he decided to build like electric vehicles and like make Tesla what it is, everyone laughed at him. They were like, what are you talking about? When he said, we're going to Mars, I'm launching rockets. He was wrong at first. I still remember he almost went broke. It was one launch. If he failed that, it was over. He didn't fail it. But people forget that. You have to be wrong at first until you win. So for India, super simple. China banned crypto maybe 15 times. But did something happen? No. Why? Because it's called the prisoner's dilemma. Okay, it's game theory. Now I'm going back to serious. Like since the beginning, we're saying and we're telling our people and our members, it's game theory. If all the nations in the world colluded and said we're banning this, then maybe it could have been shut down. But that was back then. But countries like here, Dubai, the UAE, Salvador, now the UK, even now the US as well, but eventually one by one, right? Once one opens the door, they get all the benefits because all the talent that wants to work on these new problems, that sees the utility, that like I saw it. I was like, yeah, this technology is just better. I'm sorry. So I'm going to use it. So when the talent sees that, they go towards the one that opens the door. And overall, in the tech economy of today and in the geopolitics, what they want is the best talent to come in their country and build in their country. So the US had no choice because if they didn't open the door, they'd be trailing who? Asia, China. They don't want that. Right? If they're too restrictive, the talent doesn't go there, it flows here. This is exactly what happened here.
That's true. A lot of people are building out of here because it's much easier to do it in this space.
The Indian government is going to open their eyes and they're going to see that they lost all their talent either to Silicon Valley or to Dubai or to Singapore.
That's already happens.
And this is why I'm telling you, you're wrong. They understand, they know how big crypto is. They know. The big difference is they still don't want to give it away. Why? Because who does it put in danger? Think about that.
The fiat money will lose its value.
So who?
Yeah, governments.
That's why the central bank and the banks.
The bank.
Who loses power if crypto prevails?
As well, yeah. But that's why they've taxed it. That's the biggest problem that Indians face is the tax on crypto.
Yeah. Don't underestimate them. They're smart. They know. They're doing it for a reason. People say they don't understand it. Oh, they understand it way better than you. They understand it very well. And they know how dangerous it is for their establishment.
Okay. Do you think that at some point traditional finance will be able to merge with decentralized finance?
Yes. And it's nice that you said merge and not replace. because right now it's a bit like this, and we're gonna slowly have a hand-in-hand collaboration in a certain way. Because right now in the DeFi space, there's more like tech people, builders, but now they need finance people, like me, for example, who understand financial instruments and they can, guide the tech people on how to rebuild them on that new infrastructure.
And so more and more people will obviously get into this
Oh,
space
it's
because
happening.
of that.
BlackRock, Wall Street, all the institutions now they're running behind crypto. Go to New York and Wall Street and say crypto. You're gonna have like
Really? And 10 years ago, when you got out of that space, it would have been such a
they
different,
laughed at me. They thought I was an idiot because I was leaving my how they call it my $1
stable.
million career for
How much money did you leave on the table at that time?
a lot of money.
Okay. But tell me what's been the hardest part about building this company? Because I
The
know
first
it's
6 months
the first 6 months.
when everybody was canceling us and shutting us down and not letting us do it. The for example, Stripe at some point we made our first sales, they just refunded all our customers. We're like, why? $30,000 gone. Then the customers get scared as well. They're like,
Of course. What happened? Yeah.
we couldn't run ads, we couldn't run our bank, shut down our accounts. You name it. So for the first 6 months, we were just like, keep pushing. And honestly, we were about to just give up and say, you know what, we'll try later when they are not being such,
Difficult.
yeah.
When they're not being difficult.
But then we thought, no, let's give it a last push. It's a bit of a film story. Like honestly, we could create a movie around it. And then when it just suddenly the stars aligned, they let us advertise. I don't know why. Suddenly we just got an email from Google saying, hey, your ad account is back to normal. You can run ads. I looked at my co-founder and I was like, hey, do you see what I'm seeing or am I dreaming? And he was like, let's do it. Let's run the ads. We started getting like leads, turned into customers. They were super happy. And then the businesses grew.
But that's something that happens with all businesses. You will see a stagnation until it like spikes up.
Yeah, it depends, right? Some people start and they start really well and then it collapses because they
Bit too fast.
I don't know. The partners, there's a problem or there's many things.
Yeah.
For us, it was like completely new market. No one is doing what we're doing. We're just creating something. And so maybe we're like, no one wants it, but let us try at least. They weren't letting us try it.
Similar thing happened when I was starting out my career because I did 1 year of putting out content on marketing and brands and everything. And we had about 4,000 followers in the first year. And then I went and I was like, nothing's going to happen out of this. There's no users. There's nobody who wants to get this knowledge. And I was going to close it until one day, the year after, 366th day, we got a collaboration request and they were willing to pay us money. I was like, okay, somebody's willing to pay money for this. Let me just push it a little bit longer. We straight went from like 4,000 to about like 3 lakh people over time.
Oh, wow.
So I similar trajectory of just like not giving up at that time when you feel like nobody's going to do this anymore. That happens across the board in business, I feel like.
It's business. I think no single entrepreneur will not relate to this story.
It's not going to be all just like high completely like that.
Oh gosh, no.
But tell me that you've now set up 100 people team in your company. You've scaled it to 9 figures. I want to understand that since you've done it so rapidly, what is the biggest lesson that you've learned?
That's a good question. Very contrarian take. But I believe that money loves speed, not perfection. So most people are stuck in one ideal that they have of what they want to bring to the market. They start by doing admin and making it look good, and the product must look nice and all these things. When, to be honest, in the beginning, in the early days, there's only one thing that matters. Are you able to sell it? Does anyone wants to buy it? Is anyone ready to pay money for what you're willing to offer? From there, your first few customers will tell you what they actually want. And oftentimes, it's not exactly what you thought. And so then you make the perfect product. The first thing is sell. Take that money, reinvest and make the product better. To find a fit for your product in the market. and over deliver to your first customers, right? And keep charging higher to test the price. So initially, in the first days of a company, it has to be sales oriented. Unfortunately, it has to be, because otherwise you have no legs.
Right. So your most important lesson over building this over time is that you would have to get in the money early on by testing fast. Trial testing has to be done fast so you know the money's coming in.
Because
Just stabilize it.
it's not the most important lesson, it's the first lesson.
First lesson. What's the most important one?
The most important one is, again, that you have to adapt to your environment.
Hmm.
And in today's environment, I think a remote company is much better than
I was going to ask you this because it's very, there are two ways to go about it. And I feel like a lot of people would say that how long and how big can you run a remote company? You're one of the very few companies I know that completely is remote with 100 people, or like when it has to go far. How do you think that you would manage in the long run? Won't you need your team to be sitting in one place at some point, at least your core team?
no.
Okay, how do you manage then if it is remote?
I think there are three big pillars. First pillar, and it might sound cheesy, but it's culture.
Yeah.
How do you build culture? It's not by having those table tennis,
Now pickleball
yeah, all these
and
things.
paddle.
This is BS.
Mhm.
Culture is by having a purpose-led company, not a profit-led company. So
It's your why.
if you have a big why and people adhere to it, you have principles and values, and you grow people, teach people, give feedback to people aligned always with those principles, it works. Now, how do you generate culture? You create culture is by being extremely vocal and present about your how you're helping the world or how you're going towards achieving that mission, right? The second aspect is aligning incentives. When you're remote and you have a big team, it's impossible to know who's doing what.
Yeah.
It's impossible.
Yeah.
But actually, there is a way. There is
Hierarchy.
no.
No.
There is a better way. It's most people in our company have a commission, a variable pay.
Hmm.
Most people, almost 100%. So that's what I mean by aligning incentives. How it works is, if you look at the pyramid, right? You have the founders who have to decide the vision, the strategy, make those big decisions. But then you have the first layer of managers, second layer. We're at fifth layer now. Every single one, if you align their incentives towards reaching their department goals, that further align towards reaching the company goals, right? Then it works. So how you do it is you have to deconstruct every department's success into a math formula. Literally, it's always about numbers, at least for me.
Yeah, it is.
And you assign one number to each team member, whoever that is, even to the lowest, level. They have to have one number, but it's not a task, it's a responsibility. You have to improve and grow that number, because then if you grow this number, it's going to grow the overall department's number. You're going to contribute this way, which grows the company's overall number.
When you say number, can you give us an example of what kind of trait or skill that person needs to have to be able to do this?
Okay, let's say I have my sales department. The company is trying to achieve what? Revenue and profit. Sales is in charge of the revenue, how much cash we're collecting. Within the sales department, you have the obvious salespeople. I mean, it goes without saying, they have their quotas, they have to hit it. But then you have someone who's, for example, a calendar manager. What he does is he manages the calendars of all your salespeople so that they're efficient with their time. And he has to make sure that the appointments that we set are showing up. Because if they don't show up, we can't close a deal, right? So what you do is you track the show rate and you assign the show rate of appointments to the calendar manager. Now he's in charge of figuring out what kind of sequence text messages make sure that the show rate is at its maximum. People do show up to the calls. Now it's one worry less for salespeople. They can focus on selling, and there's someone else taking care of making sure people show up.
Got it.
And any role in your company, you're able to do that. So number one was culture. Number two is find a number, align the incentives, pay them commission or at least a variable pay. Because if they're improving that number, they should be rewarded for it.
Hmm.
And what you do now is every Monday, every single team member has their number projected on screen in front of everyone, in front of their team, and it's either green or red. Did you hit your number last week or not?
Hmm.
And if not, why not? And what are you going to do to do better this week?
Okay.
And it now what happens is it takes off the weight off of your management team, for example, and it puts the responsibility back to your team members. And that's what they want. They want to grow, they want to have responsibility, and they want to have an impact.
Hmm.
Now, number 3, because it's remote and you don't have that physical interaction, you don't have the coffee break, you don't have all these things, you still have to build relationships.
Hmm.
And most important relationship in the company is between a manager and their direct report. So every single week, every single person in the company has a 30-minute one-on-one with their manager. And in that one-on-one, it's not the manager talking.
Okay.
It's the direct report giving feedback, explaining how they feel, talking about maybe what's going on at home that has an impact, right? But providing all that information that they're seeing in the trenches, oftentimes they're closest to customers, so that the information flows up and we're able to make the right moves. So these are the 3 pillars that we have. And with these 3 things, I mean, you can look at our Glassdoor reviews. We have like 50 reviews from our employees. 50 are 5 stars out of 5 stars because we really care. First, we care about them. We care about their growth. And they have the opportunity to make more because they're entrusted with something.
And you think when you scale it up to say 500 people, you will be able to replicate the same model?
I believe in the fact that 2 things. One, there's no bad employee, there's only bad managers.
Really?
Yeah.
Okay.
And second thing is, because if they hired the wrong employee, it's their fault.
Okay.
If they onboarded wrong or they trained wrong, it's their fault. Second thing is, you always fall back to the level of your systems. So for a 500 people company, you need to have good systems. Whenever there's a problem, we never like try and quickly go and fix the problem. We think holistically, what was the flaw in the machine? So that we fix that, it never happens again.
Okay. Got it. Interesting. I will be very interested to watch what happens when there are 500 people and how the systems and processes help you to scale that, because it's not regular. It's not normal to have a 100 people, 500 people remote company, especially if you're building like at scale, right? Like you would look at 500,000, whatever people, if that's the vision.
I think it will be the norm.
It will be?
Yeah.
Okay. Interesting. You spoke about speed, though, so I have a personal question on that front. I have seen a lot of people that acquire such early success, and early, I mean shorter span of time. A lot of decision making can go wrong because you get accustomed to the fact that, oh, I've done it right so much. Has that happened with you?
Yeah.
Okay, what do you do about it? How do you navigate that space?
First of all, I would say I'm lucky enough to have a co-CEO.
Hmm.
And we're polar opposite. Literally the opposite.
Hmm.
So whenever I think black, he thinks white. And oftentimes the answer is gray. And luckily for us, we've understood that and both have stripped out our ego from that. And we're able to always think, oh, this is a black and white situation. Amazing. Let's find the gray. Instead of trying to, pull towards our direction and say, no, I'm right. So that's the first thing. Second thing, I have an amazing team as a whole, not only leadership team, but everyone, because we put the responsibility on them. So now I barely make decisions on my own. Almost never happens. I always put it back on them and say, what would you do? And act dumb. Even if I very well, I wouldn't say know the answer, but I have a strong feeling about an answer. I would rather have them come up with it.
That has changed about you over the years, right?
Yes, it's lots of setbacks, mistakes, failures. I've failed so much. I love to say when people talk about speed, I've failed more than you and quicker than you. So then you learn.
And if you had to tell me, what have you learned about yourself while you have built this company, what would you say?
I am not as important as I think I was, but also I have a way bigger impact than I think I have. Your impact, what happens is when you live by these principles and you also teach that
Hmm.
to your team,
Hmm.
what happens is they carry it with them
Hmm.
and they impact more people around them.
Hmm.
They impact also your customers,
Hmm.
who then further impact their employees because they're oftentimes high caliber, business people or investors or speakers.
Hmm.
And so that, trickles down. And that's great. I've heard many members come to us and say, your organization changed me as a person.
Hmm.
The most rewarding thing, obviously, is when our team members send us messages saying we changed their lives, their families' lives.
Hmm.
That is like, I mean, you sleep at peace at night.
That's
So
something that drives you,
more than anything else.
really?
Yeah.
More than the money coming in?
More than, yeah. Initially, no. And I'll be honest, because I didn't know. And
You didn't know that feeling
no, you
of
don't know
giving
what you don't
back.
know. You don't know what you don't know. So initially, yeah, I wanted to make it. Once, you get to a certain like financial level, it doesn't make a big difference anymore. You just live the same life.
Yeah.
But this makes a big difference.
Because I was very clear from the beginning of my career, right when I was even 20 years old, that it is an impact that I want to create. And while the finances is a very important part of it, I was not always focused on just that. Like I knew that I had to have more fulfillment with what I do.
That's why women are wiser than men.
Nice. Okay. But to build this, I understand that you have to build anything as fast and at scale, you have to give up a lot of things, right? And it's important that we understand that while we talk about hustle and balance, if that's something that you really want, you do give up on a lot of things in your life to be able to achieve that. And we've seen that with you. Is it difficult? Do you regret it? Do you think you could have a more balanced approach, or do you think it's sustainable?
Do I believe I could have a more balanced approach? Yes. Do I believe in a balanced approach? Not really.
And is that what you're saying for now, or do you think like even in the
For now.
long term?
For now.
Okay.
I want to make use of the energy I have and the cycle of life in which I am. Because right now I'm in a position where I feel, okay, I have the ability to do something really big and
Okay.
impact a lot of people.
Hmm.
So I profoundly believe in the mission.
Of course, that drives you, and you put all your heart and mind into it.
If you're not running a purpose-led company, mission-led company, but a profit-led company, it goes that far. Like I would probably have slowed down by now.
Yeah, because since I know you off the podcasting, I would also assume that if you have seen Zindagi Na Milegi Dobara, give me a very Hrithik Roshan vibe sometimes, where I would be like, do you know that you have to kind of enjoy or live life and all of that. So somebody coming from that, I always wanted to ask that, do you think you're missing out on like other parts of life? But then I feel also that if you do want to create something that is so big and create such a big impact, you would have to give in a lot of years to it, a lot of your time, a lot of your, oh, I could have done this in life, but I am not doing that enjoyment because I have a mission to accomplish.
I don't think of myself like that.
It's not as bad. Okay.
No, I travel. I have fun. But
Okay.
I pick my moments. I like to look at life as 3-year cycles that are stacked.
Hmm.
And I like to look at a year as 3-month cycles, so quarters
Hmm.
that are stacked, right?
Hmm.
I'm not going to act the same way every single quarter.
Oh, that's a strategy you've adopted for yourself.
It works for me.
Okay.
So I go hard for 3 months and then I'm going to take a big break for like, a couple of weeks.
Hmm.
And summer, it's a quarter where I go slower.
Got it. I wanted to end this conversation with asking you that if somebody today listening to this wants to get into this space and also maybe comes from the finance background, what is it that they should start with to enter this space? They want to build something here.
Okay.
So, what would you say to those people?
So what they need to do is build their conviction. How do you build your conviction? You need education, but that's too easy to say. So what I strongly recommend is they understand how macro, so how business cycles and liquidity cycles work and affect crypto prices. Once they will understand this, it will remove a lot of the uncertainty on how the crypto prices moves and the fear. Once the fear is gone, they can move ahead.
You think it's largely associated to fear?
100%. Since the day I truly understood deeply how macro moves everything, the business cycles, the liquidity cycles, and I have a 5 to 10 year vision of how crypto will be, and I'm pretty sure it's going to be quite accurate. Um, look, I've had a day when my overall portfolio was down 7 figures in one day. I didn't feel anything.
Oh, really? Because there was enough?
I mean, 7 figures is a lot for anyone,
That's what.
but it didn't move me
Hmm.
because I have such a strong conviction and know exactly where it's going.
Hmm.
It's fine. It's just short term price movement.
Correct.
When I rely on the secular trend movement and not on the cyclical nature of price.
In simpler terms, it means that you don't look at the movement of the cycle in like the short term because it's going to go up and down. You look at it as in overall from today. If I saw it 5 years ago, it's not going to go down. It's only going to go
Right.
higher up. That's what you mean in simpler terms.
Okay, in simpler terms, I'm willing to bet with anybody out there
Huh.
that Bitcoin is going to be higher in 5 years than now.
That is true. That is the fact. So then how can people call it a scam? From what I have learned, if they understand the backing of it and they understand blockchain as a technology, then they will be able to understand the things that are built on the blockchain.
Unfortunately, it's more difficult to understand the technology and because not everyone is a techie, right?
no,
It's
but-
more difficult to understand the technology than to understand the macro picture and how prices are affected because people are not afraid of the technology, they're afraid
Maybe
of the
the
price.
finance people would want to go this way.
Yeah. You asked me for finance people.
Yeah, correct. I didn't know it was different for me and different for them.
Right. So I'll add something. I understand that we're, premium, so it's not very accessible to Indian, crowd. However, what we're trying to do is we're building schools in India and Morocco because my co-founder is Moroccan, and what we intend to do is build schools and then provide computers and help young kids,
Oh, nice.
code. So we invest in the future. We know they have good brains. But also, if people are interested, they can follow our social, handles because we provide a lot of education for free and we will never charge. So on my Instagram, on our company Decentralized Masters Instagram or YouTube, our LinkedIn's, we post a lot of free value and free content. And the reason why we do it is because what we sell is not the information, it's the implementation. So I'm happy to give away the information and you can go and do it by yourself.
Oh, good. That's nice for the people listening is that they can do. And we'll link it down below also for everybody to go through it. We have a small gift for you also.
Thank you so much. I'm glad to have this. It goes straight to my room.
Yay, I'm glad. But thank you so much for doing this.
You're most welcome.